All right. Let's get started with this next session. So this is part of an ongoing series that we've been doing here at Keystone Sessions called Capital Conversations. And our goal around Capital Conversations is really to start to put names, faces, stories behind the risk capital ecosystem here in Kansas City. So we've had the opportunity to hear from, institutional lenders, people that are in the grant space, really help kind of the early stage entrepreneurs, all the way up through private equity, and really help folks understand what growth equity looks like and the opportunity to get access to growth capital. I'm excited about this conversation for a couple different reasons. Primarily, I first came across this organization as part of Launch KC years ago, and was honestly unaware of some of the work that they'd been doing, and since then have been very impressed by the leadership and by some of the focus and some of the things that they brought to Kansas City. I have an amazingly annoying, I've been told that this is annoying, but I do it every time. I don't introduce my guests. I make them introduce themselves because I don't want to mess it up. That's my imposter syndrome fear of I'm going to screw up an introduction at some point in time. I know both you guys, so I'm not worried about it, but I'm still going to make you introduce yourselves. So Manny, we'll start with you.
My name is Manny, Emmanuel. Most people call me Manny. I work in the Terra Capital. I'm on the investment team, and I'm glad to be here.
I'm Jeremy Tassett. I'm the CEO of New Terra Capital. Work with Manny and a lot of other people, a lot smarter than I am. We're early stage venture capital investor on one side of our business. And we predominantly invest in health tech and health services on that side of the business. The other side of the business is the Tassett family office. And so we manage a lot of money on behalf of the family that still invests in startups and early stage businesses, but is a lot more of a generalist investor to invest in just about anything, real estate and, all kinds of different industries. Fixed income, private credit. We've done a lot of things, so very, very general. So it's a pretty unique organization to be part of because there's literally no deal that we won't look at from one side of the business or the other.
So Jeremy, I want to start with you. You and I have a connection that I only became aware of late last year. And are you good with me telling people where you're from? Are you good? Because I know some of us are a little bit skeptical about sharing this with people. Jeremy and I are both from the same hometown, Dodge City, Kansas. And for those of you who don't know where Dodge City is, it's the cowboy capital of the world. And it's in Southwest Kansas. So I'm always curious when I meet people from Dodge, because I run into them all the time. It's the weirdest thing. And for being such a small town, there seems like there's a lot of us out there.
We're everywhere.
We're everywhere. I mean, I would say like rabbits, but that doesn't seem appropriate. How'd you get here? Give me a little bit of the Jeremy Tassett story. Did you think you'd be in venture capital? Did you think you'd be doing this, as a kid growing up or even in college? How did you end up in the seat you're in right now?
Good question. I haven't thought about that for a long time, Kevin, but very proud to be from Dodge City, but from Dodge City.
Yeah,
right?
I always tell people I coined get the hell out of Dodge, so you can't take that one. So.
Growing up in Southwest Kansas, there's obviously a lot of farming and beef processing and things like that. And I knew very, very young that I did not want to do that. But it took me a long, long time to figure out what I wanted to do. I wasn't, I didn't even know I wanted to be in business school until probably my junior year of college at KU. And so, getting into venture capital it was a long, windy road. But once I got into business school, I knew that, I liked finance and I wanted to do something in that area. And then my first job out of school was as a financial advisor at a small regional firm called A.G. Edwards, which is now part of Wells Fargo. But I always had an attraction to finance and investments, and I thought that was it initially. But that was way back at a time when there were these new upcoming startup companies called E-Trade and Ameritrade that were charging $10 a stock trade. And so the industry has shifted considerably since then, but that back then it was very much a sales type of business. And so I knew that wasn't for me. after I had to, make 100 cold calls a day to try and build my client base. That just didn't suit my MO very well, and I knew that that's not what I wanted to do for a living. So, but after a couple years of that, I was having a conversation with my dad one weekend. He has a successful healthcare business that partners with physicians, and he says, I have all these guys that keep telling me that they want to start a private equity fund, and I don't even know what that is. So can you help me figure it out? And like a lot of entrepreneurs, I said, yeah, I'll figure out how to start a private equity or venture capital fund. It was way more interesting than what I was doing at AG Edwards, and so that's how we started. I figured it out. I did a ton of research. I learned out everything that you needed to start a fund and all the different service providers that you needed. I probably spent a good 12 months really researching and understanding what I needed to do. So our first fund, we raised a whopping $7.2 million. But we did really well, and we've built a business from there.
Yeah, it's. I always tell people, my kids, and primarily when I say people, I'm usually talking about my kids. I always tell people, oftentimes your career path is learning less about what you want to do and what your passion is. It's more about trying a lot of things and learning what you don't want to do and what isn't for you. So it sounds like that was a little bit of your experience. Was I've done this. This is not what I want to do, and kind of weaved your way through that. Right?
Yeah. No question about it. Even through business school, I can remember sitting in marketing classes. Nope, check that off the list. That's not for me. And just kept going on down the line. Sitting in economics classes. Nope, that's not for me. And so it was very much that path for me. No question about it.
Gotcha. No, it's great. Emmanuel, your path a little different, right?
A little bit. So I'm an immigrant, so I like to start the story there. I was born and raised in Nigeria. I came to the U.S. I never left my country. How I ended up in Kansas is, your guess is as good as mine. It was totally random. I thought it snowed everywhere in the U.S. To me, it didn't matter where you went. So California, New York, so I just picked the middle of the country. I got here, I went to KU. I was kind of similar to Jeremy. I was an engineer, so I majored in mechanical engineering, and I quickly realized that wasn't for me, and so I had to switch my majors. Which, coming from where I'm from, is a lot bigger of a conversation to have with your parents than you think. Because from where I'm from, you're only allowed to be a doctor, engineer, or I guess a doctor, engineer, effectively, or lawyer. Lawyer is like a distant third. So I had to give this big speech as to why I was transitioning away from mechanical engineering to finance. So I graduated. I took up a job. Well, I graduated, and then I went back home and I worked for a company that helped scale early stage financial services firms. So I think I'm probably in the minority in the sense that my goal was always to come here for school and go back home. I never thought that in a million years I'll still be here. So I graduated, went back home, I worked for a year, and quite frankly, when I went back home, I was moving back home. I worked for a company called Harris Holdings. It's an investment firm, and my job was to help other investment firms scale. So go from retail to enterprise to corporate, and just enhance your suite of products if you're a financial services firm. I quickly realized that I did not know enough to be an expert on that. And so I moved back to the US and I went to KU for grad school. And after that, I started working for an early stage company here in Kansas City. They used to be called Inside Response, Inside Academics. They were a startup at the time. They've since been acquired by Select Quotes, which I think is a publicly traded firm here. So I was a financial analyst there for a couple of years. I also quickly realized I didn't want to do that. I hope nobody from that firm is here, but and the reason is
we do record these, by the way. It'll be on the internet. We'll edit that out. Zeke, make a note,
please. And the reason I realized that was, if you work in corporate finance, you quickly realize that you do very little of finance. You do some of it, but a lot of your time is spent on data analysis. And depending on the type of data you're analyzing, that's a fun job, or it's a horrible, miserable experience. So I always knew that I wanted to end up on the investment side of finance. So far as to say, I networked my way to, I literally stalked the CEO of Tortoise for like a year and a half. Finally got a job at Tortoise. If you don't know what the firm Tortoise is, it's an investment firm on the Kansas side. They focus on energy, sustainable energy, and I guess traditional energy. So I was there for 5-6 years, and within Tortoise, I focused specifically on early stage investments in education, healthcare, and renewable energy. And after Tortoise, I made the jump to Newterra and to VC.
So you came here, you wanted to get an education and go home. You went home and then decided you were coming back, and you still came back to Lawrence. You still came back to Kansas. Yeah. What's that say? Be careful.
Yeah, no, so I will say this. My time, if you've lived in Lawrence, Kansas, it's a great place to be. There was a learning curve, but I learned to love it. So when I was coming back, it was really last minute, and it's always easiest to go back to the school that you already have a degree from an immigration standpoint. It's an easier sell, and it's just easier to get the things moving, or else I would have had to have waited a year. So I figured I go to KU, maybe transfer, maybe graduate, and figure things out from there. So yeah.
Man, we're glad you're here, and you're a neighbor. You're down here.
I'm in the neighborhood.
Yeah, you're in the neighborhood, so we will see you here more often. That's fantastic. So Jeremy, the move from KU to Kansas City was pretty natural. I mean, was there a stop in between somewhere to just migrate over like the rest of us from KU?
Well, when you come from the number of choices that I had in Dodge City, it was very easy.
Yeah, so the big city,
right?
Yeah.
No, I was not. I'm very happy and proud to be from there, but I didn't fit well there. I mean, I'm not a hunter. I'm not a fisher. I'm not a farmer. I don't do a lot of the things that the people that live there like to do. So to me, I'm much more comfortable in the big city, and Kansas City, I guess, is not that big, but compared to where we're from, it's huge. And so it was real easy for me to make the move here. I knew when I graduated from high school and left Dodge City, I knew that I was only going back for weddings and funerals.
That's more than I've gone back for. So my family moved, though, so I didn't have a family reason to go back anymore. But I can definitely relate and appreciate that. So Newterra, tell us, if you will, a little bit of the founding story of Newterra specifically, in terms of, you had talked a little bit about, your father wanting to start a private equity firm and so on, but the healthcare focus, like where did that start from, and what was that kind of founding piece around Newterra Capital?
Well, it all started back when we started the fund, and all of the LPs in the first fund were physicians that had already partnered with my dad's company in some way in the past. So there was already a level of trust there, but we had this built-in knowledge base of these LPs that were practicing physicians. And so the idea to focus on healthcare was, not to try and outsmart them or anything like that, but was to utilize those LPs, utilize them for deal flow and diligence and, all kinds of things like that. And maybe even potentially down the road, potential customers, users of companies or products that, that we might invest in. And so that sounds a lot better in theory than how it works in practically. But that's how we started on healthcare. And so the team, the investment team that we put together, all had some prior experience as a healthcare operator, and so that was the genesis for how we started in healthcare. But like I said, that first fund did really well, and so if it's not broke, don't fix it, right? So we've just kept doubling down and kept expanding and growing the healthcare team and strategy.
You said, I want to go back to something you just said. So when you said better in theory than in practice, for me to hear that the first fund was successful and to hear that you had a bunch of practicing physicians. I heard somebody make a joke about why they call them practicing physicians the other day is because they're all practicing on us. I don't think nobody else thinks that's funny.
It's true.
Yeah, I know. That's the funny thing about it. Anyway, so you had a bunch of practicing physicians as LPs. So for me, like watching investors invest in things they know, invest in things they understand makes sense. And you hear that a lot with angel investors. They invest in things they understand. They invest in things they know. In the VC space, I don't see that as often. I see thesis being created around what they do want to invest in, and they find advisors and so on. Was that one of the reasons that the first fund was so successful, was because you did have that base of knowledge and understanding of the industry and kind of where to fish and what to look for? Or was it more you just kind of you made some good deals in the first piece, or was it a combination of those things?
Well, I think success always comes with a little bit of luck, but yeah, definitely a combination of those things. So when having that knowledge base with your LPs definitely helps, and it helped in making some good decisions. What didn't work so well for us was they never really had very good ideas, right? So I thought we would get some decent deal flow from, but all the ideas that any of the LP physicians ever pitched us were just shit ideas. And so that's a tough conversation to have with an LP, though.
Your idea is terrible.
Yeah, your idea is
Thanks
terrible.
for your check, but your idea is terrible.
Right, exactly. And then, just expecting them to be able to help with due diligence and things like from time to time. These are busy people, and they're working 10, 12 hours a day. So to take time out of their day or evening or weekend, and try and look at a stupid medical device deal that just didn't work out that way. So, but all the other things, in terms of, when we actually did make a decision to invest in something, it did come with all, because of the support that we had and the knowledge around this, for sure.
Now, did you have a core of LPs that you could go to, though, that were pretty, like, I wouldn't say good, but were, more knowledgeable about some of those things and more willing to take that extra time and invest in
for sure.
analysis and due diligence?
For sure. We had about 70 total in the first fund, but there was a group of 8 to 10 that were a lot more active and wanting to be involved and wanting to help and to add some value. And so that was the core group. Exactly.
And how would you, I guess for either of you, how would you look at Nutera versus maybe other firms in terms of the activity level of some of your LPs, like in terms of their activity, in terms of deal flow, bringing deals to the table, being active in due diligence, being active post-investment with, some of your portfolio companies? Would you say that your LPs are kind of standard in terms of what you see around the industry or what you see from other funds, or would you say that they index higher in terms of some of their engagement?
Well, I'd say ours are probably way less engaged in the portfolio companies that we invest in, simply because most of our LPs are still just high net worth investors. So there's just not much scale that there's not a lot that they can do to move the needle as a customer or user or anything like that. A lot of other venture investors have large institutions as LPs, and we're not that big yet. Mm-hmm. And so, we don't have the endowments and the pension funds with, hundreds of thousands of members and, things like that we can leverage for our portfolio. There's different things that we can leverage, but it's not that. So our LP base is definitely less engaged, I think.
Got ya. So Manny, I'll come back to you. So your move from Tortoise to Nutera, walk me through kind of the decisioning process, or what was it about Nutera that you've found attractive as a place that you wanted to end up or a place you wanted to go?
Yeah, a lot of decisions in life come down to obviously planning and then timing as well, and then some bit of luck. I said that to say it was at a time, where Nutera is as a firm. It's about to embark on this next phase of growth, I would say. And so being able to step into an opportunity, that, allows me to step into that and tap into that was important. And, being in a firm that empowers you with the resources, with the, intellectually capital network to build and scale investment products, if you've worked in the investment industry, you pay your dues for a while. You're an analyst. You crunch the numbers, and if you're lucky, you don't do that for more than 3-4 years. But at some point, you have a decision to make. Do I stay and write things out, just move up the chain, or do I take more of a risk and join a firm where I could be viewed as more like as a contributor and as a true partner, and with that, comes more risk, but more upside as well. And so I made the decision primarily for that reason, because to put it in one word, the opportunity was there, and also the firm, and maybe Jeremy will get into this at some point. The firm has a unique combination of people that I've found to be quite different from everywhere else I've worked. Just in mindset, attitude, and a willingness to roll up our sleeves or their sleeves and wear a number of different hats. A lot of companies tout that, but when you look underneath the hood, it's really not the case. So a lot of what drew me to Nutera was just the approach to doing work, which is quite different, at least in the finance and investment world.
A lot of what you just said to me seems like it would be easy to say in hindsight, based on the decision you made and the experiences you've had since you've been at Nutera. How did you go about vetting some of those things to make the decision to actually go? Because it sounds like there was a lot of due diligence on your side around, is this the right place I want to be? So how did you go about making those evaluations of, what was underneath the hood, to use your phrase?
If once you've seen how the sausage is made, so to speak, that kind of serves as guidance as you evaluate other opportunities. So when you speak to people like in my world, in the investment industry, you can quickly tell what their true motives are. I don't know. You can just, so a lot of it was listening to the vision for the firm, and just listening to how the people treat each other, how they interact, how they work together. Because I knew that if I was going to leave my old shop, I wasn't going to go do that somewhere else. I wasn't going to go be another cog in the machine somewhere else. So for me, it was, okay, what are the real opportunities here, and do they have the capacity and the resources to execute on that? And most importantly, and I'll come back to this, in our business, the people are the product, right? We are the ones, we don't really make tangible product, so to speak, unlike some of the founders in here. We are the product, and the people you're going to be working with day in, day out matter a ton. So that's some of the diligence that I did in making that decision.
I've honestly, in all the years I've worked with VC firms in different cities around the country, I've never heard anybody, and it shocks me, I've never heard anybody reference it as a people industry. But you're right, I get it. I've just never heard anybody put that context behind it. That's interesting. Jeremy, Manny made a comment about, maybe you would get into it. So the unique approach that Nutera takes around, and I think you had made a reference to how they do business and some of those types of things. Talk to us a little bit about the operation of Nutera Capital. What differentiates it from some other firms, and maybe give us a little. So, Fund One, where are you at now? Maybe some of that context as well.
Well, I'm not really sure what he was thinking about when he said.
I love it when we do these. All right, so I'm going to just go over here. You guys have a conversation.
I'm guessing it just has to do with kind of the two different sides of the business that I tried to describe earlier. One being the venture side, and the other being the family office side. And so, all of the people work for both. And so, but there's two totally different investment strategies. One is everything is in a very narrow, small box, and it has to fit in there. And if it doesn't fit in there, you can't do it. And then on the other side is there is no box. We can do whatever we want. And so, that provides, that's fun at times, but also very challenging at times, because how do you decide what you're going to look at, or what you're going to say no to? You can't do everything. And so there's definitely, and then everybody has their own pet deal that's that comes to the table every once in a while. And so that part of it has And then it is a family business too. I mean, we do have family that works here, and my father will turn 70 this year and hopefully retire. Hopefully he's not watching this, but it'd be really great.
Edit that out.
And that, a family-owned business has its own set of unique issues anyway. And so, but I don't know if you were thinking about anything else, but it is definitely unique from that standpoint, of multiple standpoints. But just in terms of what we do on the venture side and investing in startups, I don't think we're that unique, other than we'll maybe do some things that others wouldn't. We consider ourselves very opportunistic, and just as an example, we had a local Kansas City opportunity probably 6 years ago, maybe, and it just so happened that I had known the founder, not real well, but known him a little bit, for a previous year or two. He was raising a Series B financing round. I already had a term sheet signed with a major West Coast venture capital firm, and he ran out of runway before he could close, and kind of came to me on his knees and said, "What can you do?" And our team literally did diligence in 15 days on the deal and funded it, so that he had enough runway to close his Series B. So something like that, I don't know how many investors would do. So, there was that type of thing that we just, we're still public school educated kids from Dodge City, Kansas, and we just try to work real hard and do the right thing.
Hey, there's a good public school in Dodge City, Kansas, just so you know. I mean, clearly, right? Like, did he?
Yeah, I'll add a few. I'm not from Dodge City, but I did go to a public school. No. So, I guess Jeremy is maybe too close to it, has been there too long, but, with investment firms, the way ideas are generated and the ideas that are given merit versus the ones that aren't matter a lot, because ultimately that's how deals get done, and that's how the people who lead and champion deals ultimately get rewarded if it's successful. And what you'll find is an eclectic group of people. Some people meditate in the office. Some people are they're programmers, self-taught programmers, and you have everyone else in between. And what I like is ideas are debated based on their merit, not necessarily based on who is championing the deal. And I know this because I've been in that environment, and so when I see the opposite or different model, it's easy to identify. So I think that's it's you get the sense that everyone is moving in the same direction, and no one takes it personally when the ideas are challenged. And a lot of firms say this. It's not often not the case. And Jeremy brings up an idea in the meeting. Everyone feels they have the leeway and the right to speak up and say, "I disagree. I agree. Have you thought about things this way?" So that's what I'll add to everything.
They tell me I'm stupid all the time.
That's not what I heard him say, but I mean, I appreciate that. That's it's a great leadership style. I mean, to be able to be open to like receiving feedback from everybody in the organization and to have that drive, kind of the decision making. I was going to ask the question, in the pool of things on the family office side, where you look at a lot of different things. What does guide that? What are those? I don't want to call them guardrails or the investment thesis. It doesn't sound like there's one. It sounds like you just look at the merit of each deal as on a standalone basis. Is that? I mean,
that's been the challenge, and we honestly we need to fix it, and we do need to have some guardrails because you just can't do everything, and you still have to tell people no, and that's still one of the hardest things to do in this business is to tell people no. So ours is just based on, we don't sit on a lot of cash, first of all. If we exit from an investment, we recycle that pretty quickly. And so timing for us is always really, really critical because, if we have capital, we're looking to put it back out the door in the next 60, 90 days. So we don't sit on it for very long. So whether or not that's a good strategy or a bad strategy, I don't know, but that's typically been our MO. So our guardrails is, do we have enough cash to do this?
Yeah.
Pretty
Can we
much,
get this
right?
deal done? Does this make sense? All right.
Yeah.
Yeah. You say you need to fix that, but it doesn't sound broken.
Well, we don't bat 1,000. There's a
My gosh, man. Yeah.
we've still had our fair share of strikeouts, and I think we could limit our strikeouts if we had a little bit better plan and maybe just brought the guardrails in a little bit.
Fair enough.
Maybe not super tight, but just a little bit.
Fair enough. I get that. So talk to me. So Fund 1, where are you guys at now? So walk me through the progression of Newterra in terms of, you started with Fund 1. What are you on now, and what's it look like today?
Well, we've raised 4 funds, but they all have had different strategy. So the first one was very focused on healthcare provider businesses. The second one was actually real estate fund. The third one was kind of a combination of health tech and ag tech, of all things. But that was really our first foray into true venture. And
were you looking at the translational medicine intersection of human and animal, or was it like a fund that would look at health tech as well as ag tech opportunities?
Both, yes.
Okay.
Right. So then that led us to the fund that we're investing from now, which is a pure health tech and health services focused fund. So 4th fund, but 4 totally different strategies.
And where are you at in the life cycle of that 4th fund?
We're right at the end of the investment period next month.
Okay. So getting ready to harvest.
Yeah.
Fantastic. What's a day in your life like, Manny? Tell me a little bit about what it's like to be in your role at Newterra Capital.
It fluctuates.
You said you could give him feedback. He was always open to it. So.
It's interesting. I think it depends on what we're working on. If we have a deal, because we're so lean, for now, hopefully, I spend a lot of time on doing the diligence, leading the deal all the way through, sourcing it, underwriting the deal, and then managing that portfolio company afterwards. If we are, we would allude to this at some point as we embark on our next phase of growth. A lot of our time is spent thinking strategically about how the firm can evolve moving forward. I am of the opinion that Kansas City could benefit. Well, Kansas City, the Midwest, and the greater Midwest could benefit from more institutional skill capital providers, risk capital providers. And so there's a lot of thought being put into what that looks like for us as a firm. And so a lot of my time these days is spent on what I would call investment strategy and just putting that whole thing together. So a lot of research into different verticals. I can get into that some more later on, but that's what I spend all of my time doing now.
No better time than the present. I'm curious. There's a lot of questions I want to ask, but I want to be respectful of where you guys are at in your process and what you guys are able to and willing to share in terms of what that growth strategy looks like, where you're headed next, that kind of thing. So would love to, if we think of this conversation in 3 parts, getting to know these guys a little bit and what their backgrounds are, and then talking a little bit about the firm. But then I want to get into your advice for entrepreneurs and some of that piece. But I would love to hear a little bit about what's next for Newterra. Where do you see the future of Newterra Capital, and where do you want to take it next?
Well, you're right that there's certain things that we can't talk about at the moment. But I would say that generally, we don't want to be pigeonholed as just healthcare investors. Yes, that's where we started, and yes, that's where we cut our teeth, and we have a very good track record. But we don't want to be just healthcare guys. We want to be, better investors across other areas than just that. So we're being very cautious. We've dabbled in a couple other investments outside of healthcare, and just being real thoughtful about how we build a team and what other areas that that we would like to start investing in. So the next fund likely is going to be a little bit more diverse than just focused on healthcare. We don't have that strategy fully laid out and nailed down yet, but it's for sure going to include a broader scope outside of just healthcare from there. And then, like most venture investors, just hopefully bigger funds and larger LPs. I do think though that there's a sweet spot for smaller-ish funds, and I don't totally get why every venture investor thinks that they have to have $50 million to $200 million to $500 million to $1 billion fund. I there's a lot of data out there that shows that smaller funds have better returns, and so even though we'd like to expand our investment strategy outward, I don't think that we would probably change our focus away from seed and Series A. I think that will always be our sweet spot, and this is a good place to be doing it too, I think.
So growth looks like maybe doing more of those types of deals and having a fund that gives you the opportunity to make more of those bets versus moving up to the Series B, Series A, or Series C, and beyond. And,
yeah, exactly.
And really get into that. When you and I met here. You and I met here at Keystone Sessions, and then we had a follow-up conversation. And if you guys will humor me, that those follow-on conversations were a lot about your views of Kansas City and your desires for this market and the role that a venture firm can perhaps play, or that you guys can play in that. If you will, share a little bit about, you kind of alluded to that a minute ago about the role of a firm in Kansas City, or the things that the Midwest needs a little bit. But if you guys are willing to share your thoughts on where you see Kansas City now, where you'd like to see Kansas City, and what do you think the role of what you guys do can be in helping grow this community and helping grow this ecosystem?
Well, as someone who's not from Kansas City, I'll be respectful and make sure I deliver this correctly.
Hey, we try. No. Hold on, I'm gonna stop you right there. We need to tell I believe we need to be more honest about where we are. Yeah. There's a lot of parade, and I use that figuratively. There's a lot of parade around here right now about how great things are. And I think City of Champions, fantastic, but from an economic perspective, we're on a backslide against our peer cities. So I think we need to be honest about some of these things. So fire away.
I agree. So I will say that, the obvious, to state the obvious, there's been some flights away from the city, right? So you have entrepreneurs who will live in the city, to places such as, I've been to Tulsa, Oklahoma, even Detroit is getting some action, Columbus, Ohio. These are cities you would easily consider pair cities to Kansas City, right? So, and if you ask those founders, they point to capital. Founders to some degree are over-mentored on the resource. Is the phrase that comes to mind and gets brought up a lot. Now, obviously, mentorship and all the resources that come along with that are important, but ultimately, to scale your business, you need capital, right? And so, I think in the feedback I've received is, there is a huge shortage of risk capital. And by risk capital, I mean capital that's willing to invest early, capital that has high conviction, and capital that's willing to invest in tech-enabled or just pure play technology companies, right? And so I strongly believe that, I don't think technology and innovation is unique to the Valley. I think that model can be replicated with intention around providing people with resources, capital resources and otherwise. And I think there's an opportunity here in Kansas City for a group of folks to be intentional about that, because I know a lot of people who I went to college with who have moved out of Kansas City because for reasons they would deem just a lack of opportunity, right? So so part of the problem that I spend a lot of time thinking about is how we can solve that problem. I don't have all the answers. Maybe Jeremy does have some more answers than I do. But I will say there's a lot of work to be done, because in my view, Columbus, Ohio and Tulsa, Oklahoma should not be stealing up entrepreneur. No, I don't want to say steal is a strong word to use. We shouldn't have entrepreneurs relocate from Kansas City to those regions.
Facts. I'll say stealing. I'm not ashamed to say that. Like, if you look at the size of this metro, if you look at the resources that should be available to entrepreneurs here, high growth, venture backable companies, there are very few reasons they should be leaving. There are a lot of reasons they are, but they seem fixable to me. So, Jeremy, your perspective on kind of Kansas City and your hopes and desires for what you see here.
Well, even though I wasn't born and raised here, this is my home now, and so I do feel a certain obligation to do something for my new hometown, and that's why I initially reached out and met with Kevin, because Kansas City has a lot of opportunity, but he's right. We are falling behind a lot of cities in terms of innovation and startups and economic development, cities that we shouldn't be falling behind on. Good for them, but shame on Kansas City. And I do believe that there's enough capital here in Kansas City. Maybe it doesn't, look like our company does, but the money is here. The money is everywhere here. For God's sakes, the two largest independent wealth advisors are based here. There's money in Kansas City. And so I think it's not well organized. It's not well focused. It's, there's a lot of things that the capital can do better, for sure. But all the other resources, like what Kevin's building here at Keystone, are vitally important to continue to grow and expand that, because the money will find the deals. We have to do a better job of facilitating and growing and fostering, and the more that happens, the money will be here. Most people, I've heard so many people compare us to Columbus, Ohio, for example, and they say, well, they have Drive Capital. Well, Drive Capital didn't show up with $1 billion. Like, that didn't happen overnight. All the other things, Columbus did all the other things well. The university invested, the state invested. They did all the things that they needed to do so that Drive could thrive. And that's what we need to do here.
The rest of Ohio invested $100 million. Is that how much they invested? Yeah. So that's one example of intention behind innovation and growth.
I appreciate you saying that. I wasn't trying to get a plug for Keystone out of that, but I appreciate you saying that. I'll always and mark that part of the video, please. I want to transition to so when you say the capital will find the deals, the money will find the deals. Let's talk a little bit about advice to entrepreneurs, because I think that's one of the things when we talk about resources that we can provide to the entrepreneurs themselves, to the founders. It's that education in when do you raise? How do you raise? The idea that there might be, let's just say a dozen VCs in Kansas City doesn't mean you're going to go pitch 12 VCs in Kansas City, because there's investment thesis differences and where they invest and what kind of deals they do that are all different, those types of things. So from your both of you, from your experience in looking at deals in Kansas City, talking to entrepreneurs in Kansas City, first of all, what advice would you give to someone who's considering raising capital in Kansas City based on what you've seen from the founder community here?
The first thing I would say is obviously the usual, like, know who you're talking to, do your homework, don't waste your time on people who purport to have capital that don't. It just saves you time and just conserves your energy. Be brutally honest as to whether or not your company is venture backable. I think that takes a lot of self-assessment, and if you're not sure, ask people, or ask Kevin. Kevin looks like he would know. But because what I find is, there's a Midwestern nice, and you have a conversation with a bunch of people, and they'll pat you on the back, tell you how great you're doing, and then you leave, and it's clear that they don't think you're onto anything. Right? And they don't tell you, that's feedback that takes you several meetings, several months, maybe a few years to finally get. And, maybe that could have saved you all that time if you either were, if you as a founder had some level of introspection, or you talk to the right people, right? So figuring out if you have a venture backable business, which I think that's, a problem and an opportunity I see for Newterra, because there are a whole host of companies within the Midwest that, venture, the model is, I'm only going to invest in a company if it can return my fund. Well, what if you had a company, you had a portfolio, you had a fund of companies that did like 4x, so like 4x your capital? That's a top quartile, top percentile venture capital fund. But those companies oftentimes don't get a first shake. With that aside, I think it's know who you're talking to, be brutally honest about whether or not your company is venture backable. The third one is probably, the one that I hold of most importance. Be focused about what you're doing. There's what I call the rise of the digital persona. That's great. I skew generally younger, so I get it. But the job is not to talk about what you're doing, it's to do it. Ideally, you're spending more time on the doing than on the talking. But a lot of times, it seems as though the goal is to build an online audience, which I guess, depending on your business model, is a good thing. And I don't see enough. This is the founders in general. I don't see enough of the building, and that seems to be the model that's in vogue now. And I just tend to gravitate towards the founders that have laser focus on what they're doing, because the founders that I've been around that have been successful were damn near obsessed about the problem they were seeking to solve, and they quite frankly could care less about anything else. So work-life balance is great. I'm gonna throw that plug in there, but just be focused about what you're doing, and that would, in this day and age, that would enable you to stand out from the vast majority of people.
I know we started a little late on this one, so we have a few more minutes. Jeremy, like advice, or like, there's a lot packed into that one. I'd like to dig into a little bit more about what venture backable means. So maybe, take that one too, about like what you see as what a venture backable company looks like for you guys as well. But other just general advice you would give to founders that you've seen and based on the experience you've had in evaluating deals here.
Well, first of all, Manuel's smarter than me, so you want to take his advice and over mine for sure. But I would also, so he's right about everything that he said. And I would also add that once you do decide to start a fundraising process, don't take it personally. You're going to get a lot of no's. And I think back to the time when my first job at A.G. Edwards, and this was way back, like we would cold call to build business, and we would buy lists for prospecting, and it was really, really hard for me to do that. It was hard to pick up the phone and make those calls and get all that rejection. They had years and years that they had studied the data, and basically what the result was is that for a new advisor, that every 100 cold calls that you made, you would get 10 people on the phone to engage in a conversation, and the people that said fuck off and hang up, that does not count on the 10. So these are these are 10 people who really engaged in a conversation, and then from those 10, you would end up with one account, and so that's a 1% success rate. That's really, really hard to stomach, right? So as a new advisor, I asked a more successful advisor one day how he did it. Like how did he get through all that? How did he manage all that rejection? And he told me that he would buy his prospecting list on index cards, these 3x5 index cards. And every time, he didn't get an answer or somebody hung up on him, he would just take the index card and throw it on the ground. And said at the end of the day, I measured my success based on whether or not the ground was full of cards or not, because I knew that the more cards I had on the ground, the closer I was to the yes. And so that would be my advice to you. Don't take things personally. You're going to get rejected a lot, but us venture capital investors are really not that smart. We're given a box by our LPs that every deal has to fit into this box. And I think it's because they think we're too stupid to do anything else. And so, so if your deal doesn't fit in that box, it's a no. And you're gonna get more of them, but don't take it personally. It's just a numbers game.
I feel real fortunate that my career started in outbound telemarketing in a lot of ways, because, and I was terrible at it, just to be clear. I sucked at outbound telemarketing, but it was because I got used to, in a way, hearing the no and the resilience like that. Like, I know I'm going to get to my number, but I got to keep dialing, right? I got to dial through it and get to those, the yes eventually, because it's going to come. It's a statistical thing at some point in time. But it's interesting to hear you describe it that way. And I think there's some truth to that for people that I've heard. Like, hey, I pitched like 3 VCs. I haven't gotten a yes yet. I'm like, whoa, you got 97 more to go. Like, you're in good shape. Yeah, guys, I want to be respectful of your time. Thank you so much for coming here and sharing with us. I would make you promise, but I don't know that that's going to be the case, of when you guys do have news about, what growth looks like for Nutera, that, you'll break your news here versus, some big news article or someplace like that.
I'll do a podcast with Zeke.
So Zeke's getting some pub. That's a good deal, Zeke. All right, fantastic. So, his podcast studio is right over there, so it'll be at Keystone, folks. It'll be at Keystone. No, but in all seriousness, thanks for coming and sharing. Thanks for being a part of the community. Thanks for your commitment to Kansas City, both of you. And thanks for, your transparency and honesty about what we need to do here. It matters. Like, people need to hear this. And so, especially from folks that are in seats that you guys are in. So appreciate that and look forward to having you guys back.
Thanks a lot, Kevin.
Thanks, Kevin. Appreciate the time.
Absolutely.